Hello, everyone, and welcome back to SALT Talks. My name is John Darcy. I'm the managing director of SALT, which is a global thought leadership forum and networking platform at the intersection of finance, technology, and public policy. SALT Talks are a digital interview series with leading investors, creators, and thinkers. And our goal on these talks is the same as our goal at our SALT conferences, which we just hosted our most recent conference last week in the Bahamas. Our guest today was a fantastic speaker and his firm, a partner on that event. But our goal at those conferences is the same as our goal here, which is to provide a window into the mind of subject matter experts, as well as provide a platform for what we think are big ideas that are shaping the future. And we're very excited today to bring you the latest episode of the SALT Crypto Show, sponsored by FTX. Today's guest is Tsui. He's the CEO of DeFi Protocol, which is a DeFi protocol bridging the multi-chain landscape with user adoption and protocol integration in mind. Troy was previously a trader at Alameda Research, joining the firm in 2018. And prior to his time at Alameda, Troy was a trader on SIG's fixed income desk, where he designed their municipal bond algorithmic strategy. He graduated from UC Berkeley with a degree in engineering, mathematics, and statistics, and a minor in electrical engineering, computer science. Obviously way smarter than I am. I graduated with a mere finance degree, but Troy, great to have you on. Welcome to the show. The way we like to start things off is just to give people a little bit more about your background. So I talked a little bit about your education and professional background, but what was the path that really led you to study electrical engineering and mathematics that ultimately led you into crypto?
Yeah. I guess in school, I was really interested in AI and machine learning. So kind of the natural intersection between computer science, stats, and mathematics. And those are the classes I focused on and kind of just picked my major to take those classes. After that, kind of didn't know what I wanted to do, but it sounded like a lot of smart people were in quantitative finance. So kind of applied and found myself in quantitative finance as a quant as SIG. Then crypto kind of exploded in 2017, as you guys know, and that's kind of when I hopped in and joined Alameda.
And Troy, what was sort of your eureka moment when you got enthusiastic about crypto, and how and when did you arrive at that eureka moment? Sam Bankman-Fried talked in the Bahamas about how he didn't begin his journey into crypto as a Bitcoin evangelist or somebody who loved Bitcoin from a libertarian point of view, like a lot of people do, but he more came at it as somebody who enjoyed exploiting inefficiencies in financial markets, building better financial markets and exchanges, and then later on sort of developed a better appreciation for the value of Bitcoin and decentralized finance. But for you, how did you come into digital assets? When did you come into digital assets? And what was that eureka moment for you?
Yeah, so I think there's probably two different eureka moments. The first one was when I left traditional finance in 2017. And for that, I guess the mindset I had was as a young person in your early 20s, you should probably hone the skill set that's most suited for your talents and find where in the world things are growing the fastest and throw yourself into that direction. And so in 2017, Bitcoin kind of blew up. It wasn't super adopted yet. It was still kind of didn't have the best of connotations. And I just thought, here's a chance that this thing is at the very least a brand new asset class that's about to emerge. And if it does take off, so much more than that. So that's actually what got me in, is seeing it as financial markets as a new asset class to trade. And then the second eureka moment was kind of the explosion of DeFi in 2020. So more than just kind of financial data that I was looking at from day to day, but actually looking at smart contracts, watching all this capital pour onto chain that was, governed by pieces of code, and that was super powerful, watching kind of TVL on DeFi grow from 5 million to many billions.
Right. And when you were thinking about how you wanted to enter the space and the problem that you wanted to solve for, could you talk a little bit more about what DeFi Protocol is and the problem that you are looking to solve for?
Yeah. So when we started DeFi Protocol, the DeFi landscape was much different than it is today. At that time, about 75% of it was on ETH. and a lot of it was desperately trying to get out, mostly because transaction costs were super high, things were slow. You could see that Binance Smart Chain was the first one to move on that, taking about 25% of the space, and less than 1% of that was on Solana. And that just called for just a need to move assets around these different chains that blockchains just weren't built for. They were built for just transactions on that single chain. And so that's basically what started us, is to basically enable this mobility across all different kinds of chains to promote growth in the same way that all protocols on ETH can compose with each other and promote each other.
Right. And we hear a lot about the idea that it's going to be a multi-chain future, that we're going to have multiple chains that coexist alongside of each other. I think you probably support that notion, given that you're building a solution to enable liquidity across multiple chains. Why do you think we're going to have a multi-chain future versus sort of a winner-takes-all type of outcome within the decentralized finance layer one blockchain space?
Yeah, certainly. Mostly, I think, for a few reasons. The first one is you can see kind of the technical design choices that different L1s are taking. And each of those come at a trade-off for various things. I think the most obvious one is Solana, and the way that it's designed its blockchain to make everything as parallel as possible really promotes fast transactions. And naturally so, you can see most of the projects on Solana involve kind of high frequency trading. Various other L1s have designed various things like Avalanche with its multiple subnets and various gaming things hopping on each and one of those. Basically, for a blockchain to reach the ultimate usage profile for a certain kind of tech, it has to make trade-offs depending on what kind of tech gets built on that. And so as these L1s specialize, it's likely that we come into a world where projects that are most suited for the underlying infrastructure will gravitate towards the same one. Right.
And you touched on it a little bit there, but why did you choose to build, especially on top of Solana? So, there's obviously Ethereum maxis and bulls, and there's a vibrant ecosystem on Solana. Solana has scaled massively, can do a lot of transactions very quickly. It's also experienced some outages. But as you weighed sort of the pros and cons of different blockchains, why did you settle on using Solana?
It's two big reasons. The first one was, as we looked into the space and looked into cross-chain infrastructure, the solution we felt was the strongest and had the best underlying tech was Wormhole, just based on, I guess, its consensus mechanism, and as well as its path on decentralization was what we felt much ahead of the space. And so I guess that was the first decision. And at that time, Wormhole was just on ETH and Solana. And kind of the second reason is, since it looked like Solana was most adaptable towards financial kind of trading versus other L1s at that time, mostly for Ethereum scaling, it felt like the growth of Solana would have the biggest pull for outside adoption coming into the crypto space as a whole, versus kind of the other L1s at the time were mostly taking crypto native things and making them faster. And so I guess that those are the reasons why we decided to build on Solana.
Right. And you took a novel approach. Obviously, we've heard of bridge wrapped assets, and Vitalik Buterin has written about how he thinks that bridge wrapped assets are problematic in a number of different ways. And you've created a novel solution where, no more bridge wrap assets. You're sending and receiving native assets. Why is that important? And what's your view on sort of bridge wrapped assets and why you chose this route?
Yeah, certainly. I guess to address kind of Vitalik's point, he's basically saying, because on Ethereum, when you do a transaction, everything happens in that transaction and it either happens or it doesn't. It basically, if you trade, let's say, dollars, ETH to ETH, either you lose your dollars and you get ETH, or that doesn't happen and you just hold on to your dollars. Now, this thing technically does not have the technical properties when going through any bridge mechanism. Basically, because things happen on different chains, these don't happen in the same transaction, and there is some time in between. So technically, there is a possibility you could kind of have your USDC lost on ETH and not get it on, say, Solana. Now, the probability of this happening, if you wait 15 kind of block confirmations, is extremely small. Just to kind of give you a highlight of what I mean, one block reorgs are about a few hundred a day, 2 blocks are about 2 to 3, and that just drops off exponentially if you wait 15 blocks.
In terms of other cross-chain bridges and multi-chain liquidity protocols, how is Swim's approach novel, or how do you try to differentiate yourself from other solutions that are out there?
There's 2 biggest reasons for why we've designed Swim the way we've designed. Basically, kind of high throughput and decentralization. Kind of in the mid to long term, as many bridge solutions coexist, ultimately we think that these are the 2 factors that will make or break a bridge solution. So when, let's say, billions of dollars want to move from chain A to chain B, based on your design, bridges may or may not be designed to facilitate that, but the ones that will be left standing. And decentralization kind of maybe speaks for itself. Right. It's super unclear, what the value is immediately, but basically the security of the problem will probably keep those bridge solutions standing.
So, as you talked about, the digital asset space, is maturing. I think a lot of people, it came on the mainstream radar starting in 2017. As you mentioned, DeFi has really only gained a lot of traction since about 2020. It's extremely young. We've seen hacks. We've seen sort of misinformation based on a lack of understanding coming from regulators in Washington and things like that. How much do you think the infrastructure, the code that's been built up within the DeFi marketplace, how much do you think trust has developed, and how far does sort of DeFi have to go to both, build secure systems, build trust in those systems, and also educate regulators around the world about why DeFi isn't this dangerous Wild West?
Hacks are quite an interesting thing, mostly because in DeFi, you kind of don't get the protection of Web 2, where there's kind of someone watching, making sure bad things don't happen and having things in place to stop those. It's almost kind of beautiful in the sense that the history of DeFi over the past few years, you've seen hack over hack over hack. But on top of that, you see kind of iterations and iterations over existing protocols with all of these hacks in mind. And it's certainly grown a lot, definitely during the big boom of 2020. And to top off on bridge solutions and why they've been getting hacked recently, mostly because they're super complex and they're a big pot. As in, bridges are so new and they do so many different things kind of on chain A, on chain B, and in between. There's just so much infrastructure. And even the people who are building bridges might not be able to understand all of that right now. And it just creates so much surface area. And so kind of, they also hold a lot of TVL. But as these hacks happen, all the other bridges update, they're getting safer and safer, and it looks like there's been no slowdown in demand for people to move coins across chains.
Yeah, and it was amazing to see the teams behind Wormhole, Jump Trading being a big one, others involved, stepping up and making people whole that suffered as a result of the hack, and reinforcing trust in the Wormhole after that hack. It was amazing to watch that. Creating a decentralized storage network, an indexing network for DeFi is a project that several different companies have taken on. You guys have partnered with Aleph as your partner on that front. Why is creating these storage systems and indexes so important as we're building out the DeFi ecosystem?
Mostly because, especially for cross-chain interactions, things don't happen in one transaction. So essentially, there's different states. When you go from chain A, kind of the stuff that happens in between, and then chain B. And so in order to manage a variety of states that your kind of cross-chain interaction could be in, it's really important to kind of get a good understanding of what has happened on the blockchain. And that's the biggest reason why we've partnered with Aleph, because they've built a great solution for that.
Right. And what were some of the biggest challenges that you guys have run into as you're building a multi-chain AMM, and how have you worked around those problems?
Many problems, just because this area is so new. Basically, kind of as I just mentioned, there are many things that happen on chain A, things that happen in between, and things that happen on chain B. And because this space is so new, there's not really good infrastructure. Basically, just to illustrate that point, did this thing happen on Solana? Maybe it did, but maybe the thing telling me if it happened is just wrong. And so in order to kind of, all these problems happen when trying to go from chain to chain. And so it's basically the biggest innovation we've built for this is our state machine. And right now, the user kind of manages the state machine between all of these states on the first chain, in the middle, and at the end, giving the user full custody of the funds. And then kind of we're working towards a system where trustlessly someone can crank this process for the user. Right.
And you guys are about, correct me if I'm wrong, about 2 months since you launched live. What's the growth been like, and just general education and adoption around what you guys are building?
It's kind of been amazing. I think when we first started building this about a year ago, multi-chain was still kind of a new thing. No one was really building solutions. And now kind of there's so many projects, kind of another bridge solution, more apps. It's super exciting. The need and the demand to go across chains has just grown a ton. And we're super happy that the space is at this point right now.
I think like a lot of projects, you guys have decided to introduce a token as part of the ecosystem that you're building. Could you talk about how you guys are thinking about tokenomics, the utility of that token, and how it works within the solution that you guys are offering?
Yeah, certainly. Basically, we've taken inspiration from protocols that we like. And so kind of like a curve-like tokenomics combined with Sushi's fee. So basically what that means is just token emissions to promote TVL on our pool, since the size of the TVL basically determines how good the rate is when you go cross chain. And then as well as like gauge voting and kind of an X-Sushi model so that protocol participants can basically benefit from all the volume that's going through our system.
And talking a little bit more through security. So you guys talk a lot about how you have external security assessments that take place regularly. You have a significant bug bounty program, which is a staple of sort of DeFi and the digital asset ecosystem. How effective, or which of those is most effective in your eyes? Having a third party centralized firm go through and do audits versus how well does a bug bounty type program work in terms of identifying vulnerabilities?
I think for security, our mindset towards it is just do everything.
Right.
And so we have kind of our audits. We do have our bug bounties. We do have internal systems that are monitoring everything that's happening on Swim and will alert us if there's anything suspicious. We've also kind of reorganized the way we roll out code in the sense that like no one can be alerted if there's a security roll-up that's about to happen. And so as well as kind of our own members actively thinking about ways to hack different bridge protocols. So in terms of security, it's just do everything. Can never be too safe.
Right. And again, you guys are 2 months into launch. You have significant momentum. What is next on the roadmap for Swim as you continue to scale and roll out different elements of your solution?
Cool. Yeah. So right now, kind of our alpha launch, we're launched on Ethereum, Binance Smart Chain, and Solana. We should be having other chains ready to go maybe today. internally at least, probably testing and hopefully out soon. And so the next chains kind of ready to go are the EVM ones. So that's like Phantom, that's Polygon, and that's Avalanche. And likely ones that will come next will be Aurora of Near and Polkadot. So kind of bringing a whole bunch of ecosystems to Swim. Super excited for that. That's what's next. And then kind of relayer and integrations after that.
And then thinking even longer term, over the next, let's say 5 to 10 years, as you look out into the future, in your mind, what role does Swim play? Well, first of all, what does the ecosystem look like? We're talking during a bit of a downdraft for crypto assets. It'll be interesting to see how private market valuations are affected within the crypto space as some of these fast growing startups burn through venture capital that they've raised. How do you look at the ecosystem and what it's going to look like in 5 to 10 years? Do you think this is just a natural blip on the radar as a result of sort of macro conditions around interest rates and things of that nature? So what does the ecosystem look like in 5 to 10 years? And what is Swim's role within that ecosystem in terms of how it facilitates sort of a multi-chain world?
Yeah. So I guess ecosystem in a broader category. I think basically the macro events right now, Bitcoin just seems to be correlated with tech stocks. And that's the predominant narrative in the beta there is pretty high.
It's just connected with the NASDAQ at this point. It's like a risk asset.
Yeah. It's a little weird, and maybe it should do that in the short term, but doesn't seem like maybe that's correct on the long term. In terms of growth that's coming in, tons of that's happening. Builders, more and more builders are coming in, more and more kind of talent from traditional finance, traditional tech flowing into the space. And in terms of investments, just so many funds have raised, hundreds of millions of dollars of capital, and kind of with all this talent coming in, hopefully those will be matched. And so I guess the longer term, it looks pretty exciting. It looks like there's just a huge wave that's coming in, and this little downturn in the market is, I guess, more short term than it takes for if you're talking about long term things like deploying capital and ramping up talent.
Yeah, and then as the ecosystem matures and we do have multiple successful chains that emerge. Long term, what role do you see Swim Protocol playing in sort of the facilitation of that multi-chain world?
Yeah, certainly. So I think Wormhole maybe put it correctly, or somebody, but basically the goal is to make everyone a Web3 user, not L1 users or particular chain users. And right. Just to highlight what that means is like right now, based on our infrastructure, there's just so much underlying tech that even DeFi natives have to think of a lot when just doing anything. They have to think about the blockchain. They have to think about which wallets. They have to think about which bridge solutions and how to use them. And all these things kind of are in kind of Swim's umbrella to streamline for the user. So basically making it so that if the things you want to do are like maybe, I want to trade on Solana because it's super fast, and then I want to sell my NFT on Ethereum because I need capital to do that trading. Hopefully, Swim does that all for you. You can just go to OpenSea, it works. You can just open up Drift on Solana, and it works because Swim has done all of that boilerplate underneath stuff for you.
Yeah, and for me personally, I like to experiment with new level 2 solutions that come out, whether it be through NFTs or other things. And I've certainly been at the bleeding edge of some of that with level 2s, and it's certainly when I started in that space, it felt like early days, and your money gets caught in the ether, and you don't necessarily know where it's going to end up. But thankfully, it's all made its way to the right place eventually, with some headaches along the way. But it's exciting to see sort of that interoperability really mature to the point where, like you said, people can operate within Web3 without even thinking about the fact they're in Web3. I think that's when we'll really arrive as an industry, is that, my dad can buy NFTs without getting a headache about how to operate his wallet and move assets across chains and things like that. But I think you made an interesting point. And this was a lot of the commentary that we saw coming out of Crypto Bahamas as people wrote, media outlets wrote articles about their takeaways from the event. And for them, it was sort of the quality of the people that were at that conference in terms of their backgrounds as well. You had people coming from major banks. You had people coming from leading Web 2 companies. You had people coming from traditional finance or retail or all kinds of different industries. And you're seeing some of the smartest people in those industries migrate into Web 3. What's your observation in terms of how motivated people are from that sort of Web 2 world? You came from sort of a finance background with a tech educational background. You obviously applied a lot of that within quantitative finance. But what are you seeing as the appetite for people, whether it's in finance or tech Web 2, to move into the digital asset crypto space?
Oh, yeah, it's huge. All the way down from kind of talent that's flooding kind of resume pools right now to big companies, hiring a bunch of, Web3 developers and pushing out initiatives. The move seems evident, and there's a huge gap that people in Web3 can fill in to make that move as easy as possible.
You talked about all of the multi-$100 million and even billion-dollar plus funds that have been raised within Web3 crypto digital assets that still have yet to be deployed. But at the same time, you see valuations, obviously growing significantly within the space, and people are looking for areas to deploy capital. What areas within Web3 do you think are most poised to explode in terms of their growth? And what are areas that you think investment will help bring the industry forward?
Interesting.
Is it NFTs? Is it DeFi? Obviously you're a little biased potentially toward DeFi, but where do you think the biggest sort of innovations and capital flows potentially could take place over the next couple of years with all that dry powder that exists?
Certainly. I think maybe in a few months ago, I think definitely the top of interest in terms of investments for Solana and Metaverse. Now that that's kind of been 6 months in the past, it looks like a lot of investment is going into different L1s. That's like kind of projects on AVAX, on Near, and whatever L1 is coming next on the horizon. And certainly a big pull into kind of bridge solutions as well. And that's kind of my best guess of where the money is going. And in terms of propelling us further, I think the less eye-popping numbers, but certainly a big amount of money is going to bridge basically traditional infrastructure to Web3 infrastructure, whether that's like KYC, different paths, different APIs that traditional banks can use to interact with crypto, as well as kind of that prime brokerage that traditional trading firms are basically have infrastructure to trade around. But yeah, kind of propelling further, I guess there's all the like bridging stuff between traditional to crypto. There's all the bridging stuff within crypto. There's exciting stuff on the metaverse, and maybe the future steers towards a place that's not known yet, but excited to see that.
That is often the case. In terms of geographic adoption and regulation around crypto, obviously you're in the DeFi space, which is regulators in Washington are still getting their heads around how do we treat and regulate DeFi. The SEC just hired 50 people in their enforcement unit to look into various things across Web3 and digital assets. And China obviously has banned the use of decentralized crypto in favor of trying to build out their central bank digital currency. You've seen a migration of people into a country like the United Arab Emirates, which is an area that we do our conference in Abu Dhabi and have been very familiar with sort of their aha moment, their eureka moment around building out a vibrant digital asset ecosystem there. But as you look around the world, how are you evaluating things like regulation and growth? And are there areas of the world that you are particularly bullish on in terms of adoption of digital assets?
I think there are a handful of cities that are extremely favorable to crypto, probably ones for hosting crypto events. And it's
that's a telltale sign. A lot of crypto conferences in Miami, a great one in the Bahamas, a lot of them in Dubai and Abu Dhabi. a couple in Singapore, but they're still trying to figure out exactly the way they're treating digital assets. But yeah, you're right. It's probably a good telltale sign.
Yeah, it's super exciting, and they're definitely trying to make it nice for crypto companies to move there. So that's super cool. In terms of kind of adoption on a separate layer, I mean, ultimately, one use case of crypto is kind of banking, and so for countries that could use an improved banking system, there's certainly kind of onboarding, and I think we've already seen a lot of that. But yeah, overall, it seems like pretty good. Companies
Can't complain too much.
Companies, it sounds like if you want to grow and innovate, there will be many places in the world to promote that. So it seems pretty good.
How do you respond to people who say, "Oh, DeFi, I've read about DeFi and how it operates, and it's an area of the marketplace rife for financial crime, fraud, nefarious activity." Why do you think ultimately DeFi is not going to become a destination for that type of activity more so than the US dollar or cash or anything that's been used in history? But how do you push back on that narrative?
I think for anything that grows so fast, even kind of Web2, that fast growth just promotes like something that's so new that regulation just hasn't caught up to, and just creates a bunch of opportunities for things to happen. Now, while a lot of those things have happened, the more recent landscape is much different. You can basically kind of verify that by looking at all the past hacks, and basically kind of all the hackers have a lot of trouble being able to convert that money out to spendable money, whether it's all exchanges blacklisting them, whether it's their funds being frozen, or just kind of sitting there because they realize they can't do anything with it. In essence, it's because it's on the blockchain, like every person who has access to the blockchain can go figure it out. And there are a lot of people doing that right now. It's almost more transparent than, I guess, the traditional fiat system.
Right. And I asked you earlier about how you became enthusiastic about crypto. I didn't ask your views on sort of Bitcoin versus decentralized finance. We obviously have a lot of Bitcoin maxis who think that Bitcoin is the only asset that merits consideration because of its, tokenomics and immutable properties and fixed supply and all that great stuff about Bitcoin. You have people that are Ethereum maxis, or people that are less enthusiastic about Bitcoin and more enthusiastic about use cases for DeFi. Where do you fall on that spectrum in terms of how important do you see Bitcoin to the growth of the ecosystem? If Bitcoin falters, for example, do you think that we'll still see this explosion in Web3 and DeFi?
Bitcoin holds a very important part, mostly because it is kind of built and the mechanisms behind it make it kind of the decentralized gold, I guess. Ethereum is a bit different since it's kind of like a decentralized supercomputer. And a lot of the kind of Ethereum killers, I don't want to use the word killer, but that's what crypto Twitter is calling them, are basically different kinds of supercomputers that are decentralized. So, I mean, Bitcoin is kind of, it's a much different spot than kind of all these other chains. And I do kind of see it as the decentralized gold. Not a maxi in any way. I just looking for just the most smartest innovations and the most impactful ones.
Yeah, it'd be tough for a multi-chain liquidity provider to be a maxi, or at least say it out loud. So not particularly surprised by that answer. But Troy, Tsui, it's been a pleasure to have you on. We want to thank Swim Protocol for being a great partner down at Crypto Bahamas. We hope to have you guys next year. I think, things move so quickly, but so slowly in Web3 and crypto, where you guys have been live for 2 months and the explosion of growth has been amazing. Even DeFi has only really started to become somewhat mainstream in the last 2 years. So it'd be interesting to watch your maturation over the next year before we gather back down at the Bahamar in the Bahamas. But thank you. Great talking to you. And we hope to talk to you soon.
Awesome. Thanks for having me, John. It's been a pleasure.
Thanks again, Troy, and thanks everybody for tuning into today's Salt Talk with Troy Tsui from Swim Protocol. Just a reminder, if you missed any part of this episode or any of our previous episodes, you can access them on our website at salt.org/talks or on our YouTube channel, which is called SaltTube. We're also on social media. Twitter is where we're most active at Salt Conference. We're also at Crypto Bahamas. Now that we have a new Twitter handle and a new event that we launched this year. But we're also on LinkedIn, Instagram, and Facebook as well. And please spread the word about these Salt Talks. We love exposing people to very intelligent people like Troy who are building at the forefront of DeFi. But on behalf of the entire Salt team, this is John Darcy signing off from Salt Talks for today. We hope to see you back here again soon.